traders, it is Wednesday evening, September 16th, and that must mean that it is time for our weekly swing trading video. It's been a crazy 2 weeks. Let's take a look at what the market's done since my video 2 weeks ago. Right here was my video at the market all-time high. We did not take any new positions at that time. As I pointed out, we had a bullish or a buying climax that was taking place. I knew that we were going to get a sharp market decline, so we were simply going to manage the positions that we had on. We had a variety of different expiration dates, so some of them expired. We're safely out of the money. Some of them we had to make some adjustments. I think that entire process was probably good from an educational standpoint. You saw how we adapted and why we adapted to those positions. Net, we made money on all those trades. And we had an adverse market move against us. So I consider us to be fairly lucky. But we had this big drop right in here. And this was the price action on Tuesday. This is the price action a week ago Wednesday. We had a nice bounce just above that 50-day moving average. And it looked like everything was going to be fine and the market might continue to grind higher. I kind of knew better. And that's why the picks from last week, I wanted to make sure that if we got a big market pullback, that we were going to need the stocks to pull back in order for us to get filled. So this is the price action that we had Thursday after last week's video. You can see the very, very steep selling. Typically, if you have a big drop like this, and then a tiny candle in between, followed by a long red candle, that is a warning sign that the selling pressure is still heavy, and we could have easily had a couple of follow-through bars that would have taken us down to maybe SPY 324, perhaps even down to the 100-day moving average. You never know how heavy that profit taking is going to be, how heavy that selling is going to be, or how exposed bullish speculators are. So it was best for us on Thursday evening last week. I sent out an email and I said, listen, we didn't get filled on any of our spreads. We're going to err on the side of caution and we are not going to execute those trades. Now, of course, all three of them did extremely well, and we had another retest of the 50-day moving average, and the market was able to bounce off of that low last Friday. I also suggested closing out our remaining bullish put spreads. Those also would be in great shape if we just left them on. But again, we are erring on the side of caution. We've had a fantastic year, and I do not want to give those profits back. If I took a look at the price action from last Thursday and last Friday, they were very, very bearish. And I was happy as heck when that closing bell rang and we were flat. I took a deep breath and I thought, oh my God, I think we dodged another bullet. Let's wipe the slate clean. Let's let the dust settle, and that's exactly what we're going to do this week. We are not going to take any new trades. I know that's going to come as a disappointment to some of you. For those of you who are super nimble and super aggressive, we'll take a look at a couple of stocks that you might consider. But overall, don't sell any out of the money bullish put spreads. Here's what I expect the market to do. We've got buyers and sellers are paired off right now. The reason that the market has a lid on it is valuation first and foremost. At a PE of 23, the S&P 500 is very, very rich. The economic recovery has been stalled by the second wave of the coronavirus, and we've got uncertainty surrounding us with the upcoming election. I don't think the election results are going to be known that night. There are a lot of mail-in ballots that have to be counted this year. That uncertainty is not going to be good for the market. So those are the reasons that the market has not been able to recover very well so far. On the bullish side, we just had the Fed come out and say we're not going to be raising interest rates for 2 years. If inflation gets above our 2% target, we don't care. We'd welcome it. We're not going to raise rates even if that happens. Well, that is naturally going to push money into the stock market because bond yields are underperforming inflation. That means you have negative real returns in fixed income. So people are pushed out on that risk curve, and they're in the market. So there's always a very strong bid to the market. Between these two forces, anytime the market gets a little bit ahead of itself, it gets smacked down by profit takers. Anytime the market pulls in, you know that you have a natural bid. From a technical standpoint, the way that I see this currently playing out is that we're going to get a couple of aftershocks after a nice drop like this. And I view it very, very similar to what we saw back in June, July this summer. So if we take a look, actually it was June, we had this drop right here, then we got a nice little rally off of it, and then all of a sudden the price action started to waffle a little bit, weren't able to really get into this gap and fill it. That meant that there was more selling to be done. So we saw another round of selling, and then we saw some buying come in. This was a double bottom, higher low, just above that 50-day moving average. You can see the 200-day moving average was coming into play right there as well. Then buyers stepped in, and then they got pretty aggressive. We also had this downward sloping trend line that was breached to the upside. I believe that we're going to see a similar type of pattern here. We're going to try and advance, and then we're going to see some selling pressure, and that selling pressure could be pretty dang swift, just like it was today. We had a very dovish Fed statement. You would think that based on that statement, the market would be off to the races. Not so fast. Actually, everyone was expecting a super dovish Fed statement. So let's take a look at that 5-minute chart. And you can see there's the FOMC minutes right here. Not the minutes, but the FOMC statement came out here. And you got this nice big rally and then this bearish engulfing candle right in here. I'm going to overlay the 10p indicator because that set up a beautiful short for us. And you can see how we had that bearish cross came into play right off of that peak, and that set us up for a great short right in there, and that coincided just before the market climaxed, and that was a good I think 23-point winner that I had on the S&P. Plus we had a nice bullish cross right in here, so I made another 7 points on that. Day trading has actually been quite good. We had a nice bearish cross in there, bullish divergence. This ends up being a nice bullish signal in here. So on a day trading basis, we've had lots of opportunities to buy stock with relative strength and to short stocks with relative weakness. But on a swing trading basis, we've got an awful lot of chop. And when I see selling pressure like this, it tells me that there's some unfinished business. The market has to establish that support level. If we go out and start selling bullish put spreads right now, we have a possibility of really getting whacked and whacked hard. And I don't want to be exposed to that. I want to see that next down leg. I want to see that support level hold. And before we even get there, I'd like to see another bullish hammer like that, meaning we come down during the day, we test that level, and buyers come in so fast and so hard that they rally the market all the way back to unchanged. That's going to give me a hammer like that, and that's going to give me the confidence to sell out of the money bullish put spreads again. So we're going to stay sidelined because there's another pattern that could evolve here. And if this little bounce only takes, let's say, 5 to 10 days to materialize, and we get another long red candle just like this one, that is going to flush a heck of a lot of bullish speculators out, dip buyers, if you will, and they'll be shaken out when we take out that support level. That would also do a lot of damage to any bullish put spreads that we might have sold. So let's take a look at what we had tried to put on last week. WKHS was one of the stocks that we were trying to sell an out of the money bullish put spread on. I don't even know that we would have gotten filled on it. That was the price action from Thursday, and look what it did Friday with the market down. This stock had a full head of steam, and now it's off to the races. So I don't think we would have even gotten this one off. The stock is that strong. So good stock pick. That means we're doing something right. ZM was another bullish put spread we were trying to put on. There's the price action from Thursday the 10th. You could see the market was down huge. This stock didn't even give back the gains from the prior day. Very, very strong price action, and look at it inch higher. Another really nice one, DKNG. That was our third and final one. Actually on September 10th, we never got a drop. The stock was actually up on the day when the market was selling off hard. That was a big clue that this stock really wanted to go. And look at that price action on Monday, off to the races through that resistance level to a new all-time high and follow through today. I really like this stock. So if you're looking for a possible bullish put spread, then you might consider selling a bullish put spread, and I would use that high as my support level, which was 44.79. So let's call it $45. You can see $45 right here. That's halfway up this long green candle. So I would try and sell a 45, maybe 42.50 bullish put spread a couple weeks out. Now here's what has to happen. If you put a trade like that on, you've got a couple of support levels that you have to lean on. The low from today, you want to see that intact. You do not want to see that violated. By all means, you do not want to see the low from yesterday, which was 46.50 violated. If you close below 46.50 and you sold that $45 put, reel it in. Shut her down. If you see the SPY trading below support, you've got to buy it in also. We have a small support level on the SPY, and let's take a look at the SPY because I've got to set the backdrop here as well. 1, 2, 3, 4, 5. 5 different times we have tested SPY 342.50. And you can see that is a heavy resistance line. I'm going to draw it for you. I'm going to click here and I'm just going to drag across, and that is your resistance level right there. Market has not been able to get through that. Down here at the 50-day moving average, or very close to it, you've got 1, 2, 3 tests, 4 tests as well. So we also have very, very strong support. And that tells me that the market could spend a little bit more time right in here and chop back and forth between these two ranges. We're not going to risk having down, down scenario. If we come down and then we bounce off of it, then we can start pecking away at some more bullish put spreads. I'm not going to until I see that happen. From your perspective, if the market comes down and takes out that 50-day moving average and you put some bullish put spreads on, you must exit that trade. And I would use 337.50 on the SPY, which I think is going to be tested tomorrow. That's your first support on the SPY. And you can see that is the level right there. That was the low from 2 days ago. That should be tested tomorrow. I don't think that it's going to hold given the selling pressure today. I also think that given the selling pressure after the FOMC statement, that we're going to test the bid tomorrow before we get any kind of rally tomorrow. So if we get an opening gap higher tomorrow, I feel that that rally is going to be very vulnerable to profit taking. We will not see a good, decent rally until that bid is tested. Sellers are unloading stocks and they want to make sure that buyers are still there before they stop selling. And buyers want to see that support confirmed, just like we want to see it confirmed. Then they're going to have the confidence to come in and aggressively buy. But until then, we kind of chop around and the two sides play tug of war. So let's take a look at our trade screen, and we had some spreads on last week that we closed down. I'm going to take a look at these. Dell, really nice shape. That's about 5 points out of the money with 2 days left. That would have expired. We reeled that in for a small gain, and you can see the prices here. Alibaba, that expired worthless last week. Z has been a really strong stock also. That expired worthless last week, so we made our 25% return on that. It expired Friday. AstraZeneca, we bought that back for a small gain. I believe I was seeing fills somewhere in the, I think 45 cent range. I had mentioned to you we're probably shutting down a good spread. They have resumed their trial. The person who became ill had nothing to do with the vaccine that they had given them. TMUS, we closed that baby down. We made a little bit of money on that one also, and that also would have expired worthless. So we had a number of chances here to make money, but we erred on the side of caution, and there's nothing wrong with that. Better to be safe than sorry. So, given that we had a bunch of really good trades on, and given that we closed a bunch of really good trades down, I'm not going to put my head back in that news. If you're looking to put a couple trades on, let's take a look at some stocks that might line up well for you. As far as all of us are concerned, as far as new trades, not going to do. I'm going to continue to wait. I'm going to go into the heavy buying list right here. We'll take a look at some of the stocks that have been performing well. BYND actually looks good. It got through this horizontal resistance level here, horizontal resistance here. You can see where the 100-day moving average comes into play. Stock's got a nice little head of steam here. That's what happened last week. And those days when we get that big market selling, those are days when you want to be running your relative strength searches. You want to be looking for the stocks that actually finish the day on a positive note. Those are the ones that are going to do that. BYND certainly qualifies. We'll keep going down the list. NVAX, I looked at that. I love this bounce off of the $90 level. You can see that that is a support level at the 100-day moving average. So that looks actually really good. I like this bounce. You had your downward sloping trend line here. Nice follow through. It's bumping up against that 50-day moving average. But I think in this case, if you were to look at the $90 strike price, that would be a nice bullish put spread to put on. But the stock is at $120. So given that it's 30 points out of the money, you're going to need to have a little bit of a pullback, maybe to that 110 level, to be able to get any decent credit for a $90 put. Z, I had also mentioned to you, I believe that that is another nice one. Breakout to a new relative high. This is a bullish put spread that expired last week that we did well on. And let me take a look down the list here, see what else we've got. MCD actually has been nice too. You can see it steadily grinding higher. You can see that nice bullish price action right here. Breakout early this week, Monday, and follow through buying. So McDonald's looks pretty good also on the long side. And let's see if I've got anything else in here that catches my eye. Micron had a good day, but that's a relatively choppy stock, so I wouldn't suggest that. You've got WHKS or WKHS, which we looked at. So those are some decent picks that you can be looking at. Pop Bull, LYV, I like that. I actually had an alert set on that. This stock doesn't have great option liquidity, but you can see that it's through that prior high right there, and now it's starting to grind. So if you're looking to simply buy some stock, this one would set up well for that. Let's set up a game plan for buying some stock. So let's say you come in tomorrow, you want to buy this stock. First thing I would do is I would set that nice, steady uptrend line. See how well that fits? You're above the 200-day moving average. You've also got a horizontal resistance line right here. So if I want to use that as a safety net as well, I can. And what I would do there is I would give it a little room to come down and test that level. And the way that you would do that is click GTC, and you could double click on that. So now you can see I'm going to have a horizontal support line that's going to extend like this, and I'm going to have a diagonal alert line that's going to extend like this. And if I'm swing trading, I buy the stock, and as long as I don't turn on my computer after the market closes, and as long as I don't have an alert saying, hey, the stock has breached this price point, I stay in the trade. This one would protect you if the stock fell. They both intersect at the same level, but this one actually is nice because that becomes your trailing stop. And you can just ride the stock higher. So very, very effective tool to use for swing trading. Pop Bull is my absolute favorite swing trading search. And I was going to contemplate getting Cute, and having a contingency in case the market really did fall hard, that we'd be able to buy some puts, have a quick target out there to snag some profits. But I'm not going to do that. I'm not going to play it cute. I want to see that second support here. I want to see it hold. Our play is we're going to sell out of the money bullish put spreads, and we're going to wait for that support to be well defined and confirmed. So that's all I've got for you tonight. Sorry I didn't have any picks. You know how to use the platform. You know how to mine for your own stock trades. If by chance I see anything that looks really, really good in the course of the next week, I promise you I will send out a video after hours so everyone has an equal opportunity to get in on that trade. So if we see a sell-off and we see that really nice bullish hammer that tells me that the coast is clear and we can get back in trades, I'm going to send you a video, and I'll have at least one, if not two, new bullish put spreads for you. But for right now, we're going to enjoy being in cash. We're going to watch the market action from the sideline, and we'll err on the side of caution, and then we'll be ready to strike when the iron is really hot and we get that second confirmation. Thanks so much. Have a good evening. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.